What if the products you buy were only from your own country? How would that impact your economy? This hypothetical scenario introduces us to the concept of protectionism, a policy approach that, at its core, aims to guard domestic industries from foreign competition. Now, let's peel back the layers of protectionism. At its simplest, protectionism is like a shield, a form of economic policy that restricts imports from foreign countries with the primary objective of protecting domestic businesses. It's a way for a country to say, we're going to support our own industries first. But how does a country go about doing this? There are several tools in the protectionist toolbox, each with their own implications for trade and the economy. First up, we have tariffs. These are essentially taxes imposed on imported goods, making them more expensive and less attractive to consumers, thereby giving a competitive edge to domestically produced goods. For example, customs tariff duties apply to goods which are imported from third countries across the EU's external borders. Then we have quotas, which limit the quantity of a certain good that can be imported within a specific period. By restricting supply, quotas can drive up the price of imported goods, making domestic products more appealing by comparison. And let's not forget subsidies. These are financial support given by the government to domestic industries, helping them to compete against cheaper foreign imports. Subsidies can take various forms, including cash grants, tax breaks, or low-interest loans. Protectionism then is a complex system of levers and pulleys, each designed to give domestic industries a leg up in the global marketplace. But it's not without its controversy. While it can safeguard local businesses and jobs, it can also lead to higher prices for consumers, less variety, and potential retaliation from trade partners. So, in essence, protectionism can become a paradoxical situation, potentially protecting local businesses, but at what cost? Why would a country resort to such measures? Let's look into the goals of protectionism. According to the World Bank, protectionist policies are often implemented with several key objectives in mind. First, there's job preservation. By shielding domestic industries from foreign competition, countries aim to safeguard local jobs. This is particularly relevant in sectors vulnerable to cheaper imports. Next, we have industrial development. Protectionism can provide breathing space for nascent industries, allowing them to develop and mature without the pressures of international competition. This is often referred to as the infant industry argument. National security also figures into the equation. Certain sectors are deemed too important to be dependent on foreign suppliers. Think defense, energy, and even food production. Here, protectionism is viewed as a strategic tool to ensure self-sufficiency and resilience. Another argument often put forward is the need to address trade deficits. By limiting imports and promoting domestic production, countries hope to balance their books. Lastly, protectionism can be seen as a measure to control outsourcing, maintaining domestic capabilities, and preventing the hollowing out of certain industries. Protectionism, therefore, is seen by some as a necessary tool to maintain economic balance and safeguard national interests. But what happens when protectionism doesn't work as planned? Well, let's examine the failures of protectionist policies as outlined by the World Bank. You see, protectionism, while conceived with the best intentions, can inadvertently lead to inefficiencies. These inefficiencies can manifest in various forms, such as a decline in the quality of goods, a lack of innovation, or even an increase in prices. Essentially, when domestic industries are shielded from competition, they may lose the incentive to improve, innovate, and remain competitive. This could result in a stagnant or even declining industry. Argentina is a perfect example of overprotectionism. Despite having significant natural resources and agricultural potential, Argentina has struggled to achieve sustained economic growth, due in part to its reliance on protectionist measures. As a result, the country was isolated from world. But the impact of protectionism doesn't stop at inefficiencies. It can also lead to decreased competitiveness on a global scale. When industries are protected, they may become complacent, failing to keep up with international advancements and trends. This could leave them ill-equipped to compete on the global stage once protectionist measures are lifted, leading to potential economic decline. For instance, the US currently poses threat to the liberal trade policies it built as part of the WTO. Both the current and former American presidents, Joe Biden and Donald Trump, imposed tariffs on a wide range of Chinese goods, aimed at supporting key sectors such as semiconductors, electric vehicles, and offshore wind power. These policies involve substantial subsidies totaling $1 trillion to incentivize production in these areas. Some might argue that these measures inadvertently provides breathing space for local businesses. But perhaps the most significant drawback of protectionism is its potential negative consequences for consumers. Without the pressure of competition, domestic industries may raise prices, leading to increased living costs and potentially reducing the purchasing power of consumers. And what about the instances where protectionist measures have failed to achieve their goals? For example, the US-China trade war had unintended consequences, benefiting third-party countries and highlighting the complexity of trade policies. Countries like Vietnam, Thailand, Korea, and Mexico were able to boost exports significantly, in part by offering substitutes for goods subject to the US-China tariffs. So as we see, protectionism can sometimes create more problems than it solves. The road to economic prosperity is not as simple as raising barriers and isolating ourselves from the world. It's a complex, nuanced journey that requires careful consideration and strategic planning. So how does protectionism impact critical industries? While protectionism may have advantages, it also comes with risks and downsides. On one hand, protectionist measures are designed to shield these industries from international competition, providing them with the opportunity to grow and consolidate. On the other hand, such measures can inadvertently place these very industries at risk. Now let's discuss the threats protectionism can pose. One major risk is the potential for trade wars. When a country erects trade barriers, it's not uncommon for affected countries to retaliate with their own set of restrictions. This tit-for-tat scenario can escalate into a full-blown trade war, disrupting global trade patterns and causing significant economic fallout. Another risk associated with protectionism is disruptions to the global supply chain. A perfect example to explain this are the recent sanctions imposed on Russia. The EU sanctions against Russian goods had major reverse impact on the European economy, contributed by higher global commodity prices and a slowdown in EU's economic growth. In our increasingly interconnected world, industries often rely on components and raw materials from various parts of the globe. Protectionist policies can disrupt these supply chains, leading to increased costs, delays, and inefficiencies. Now, let's consider the implications for specific industries. Take technology, for example, which thrives on global collaboration and open markets. Protectionist measures can stifle innovation, restrict access to vital components, and limit the industry's ability to compete on a global scale. The agriculture and manufacturing sectors, too, can suffer from trade restrictions, as they often rely heavily on export markets and imported inputs. The impact of protectionism on critical industries can be far-reaching and complex. That requires careful consideration of the potential risks and rewards. Is there a middle ground between protectionism and free trade? As we dug deeper into this complex topic, we come to realize that trade policy cannot be viewed in black and white terms. A balanced approach is needed, one that respects both protectionist and free trade principles. Protectionism can indeed safeguard domestic industries and jobs, but it's also crucial to remember that open markets and international cooperation play a significant role in driving innovation, competitiveness, and economic growth. Consider this: a country that insulates itself from global competition may initially protect its domestic players. However, in the long run, this could lead to complacency and stagnation, as there's little incentive for these industries to innovate and improve. On the flip side, unrestricted free trade can lead to domestic industries being outcompeted by more efficient foreign counterparts, potentially leading to job losses and social unrest. So where does this leave us? It emphasizes the need for balance. Policymakers must strive to create an environment that fosters competition and innovation, while also providing a safety net for industries and workers that may be adversely affected by foreign competition. This could entail implementing selective protectionist measures while also encouraging industries to adapt and compete on the global stage. Finding a balance between protectionism and free trade is a crucial task for policymakers, especially by understanding the economy and the global trade dynamics. While protectionism is often deployed with the aim of shielding domestic industries from foreign competition, it can lead to inefficiencies, reduced competitiveness, and even be detrimental to the consumers. Protectionism can also pose threats to critical industries, potentially sparking trade wars and disrupting global supply chains. In the face of rising protectionist measures, the need for evidence-based policymaking becomes even more critical. It's crucial that we don't lose sight of the broader economic picture and the intricate interdependencies of global trade. What are your thoughts on protectionism, and if it helps or hurts an economy? Do you know what's the approach embraced by your country? Let us know in the comments below. We'd love to hear from you. Until next time, take care.